I would imagine everyone watching this video has felt the volatility of the current insurance market, whether that be with price, coverage changes, or maybe worse yet, a non-renewal on your policy, whether it's within your control or not. You have every right to be frustrated and confused. And a lot of the questions you're asking are, why? I pay my bills, I didn't have claims, I'm a loyal customer, and there aren't wildfires or floods in the Midwest. Honesty and integrity are a part of our core values here at Hoosier Associates. And our customers and all consumers out there have every right to know what's going on with this current insurance market. Contrary to popular belief, insurance companies have actually been losing money the last couple years, and a lot of it. That alone requires action for every insurance company. We know that it's not due to the decisions and the actions of one insurance company, because every insurance company in the market is feeling the profit loss. In order to stay in business, changes have had to be made. But first, how did we get here? One being inflation. Everyone has felt it since 2020. Let's talk about a simple roof claim. A standard home, ranch, maybe 1,500 square foot. You could put on a roof prior to 2020 for about $10,000. Now we're seeing those claims go for $20,000 for that exact same roof maybe 4 years later. Your insurance premiums haven't increased 100%, yet the insurance company is paying out 100% increase on those claims. We've seen a frequency of storms. So not one major storm every month. There could be 2, 3, 4, maybe even 5 tornadoes hit within 1 month with different states. We're seeing a severity. Instead of a 2-mile radius of the storm, it could be a derecho that is hundreds of miles wide, causing more claims than ever before. Did you know in Indiana, there was actually 100 reported tornadoes in 2023 here in Indiana? In Benton County, we actually felt a couple of those in the spring of 2023. It hit close to home. The storms in Iowa and Texas and California and Florida, even though they aren't our states and they aren't necessarily right in the Midwest, they are having a direct reflect on our insurance rates and the companies that we get to represent. One thing causing this would be something we call reinsurance. Every insurance company buys a policy kind of like a deductible. The max out of pocket per storm that may hit, the insurance company can budget for what that is. There's only a few reinsurance companies in the market, so they are playing hardball, and they are pushing rate and they're pushing higher deductibles on your insurance companies, which directly is pushing it down to you. They even have gone so much to say you can't write these risks anymore. So companies may be canceling your policies and you haven't had claims with them. They are also saying you have to increase your deductibles on homeowners or property or auto if you want us to write your policy. They are also increasing premiums. And we've seen 20, 30, some of the insurance companies have seen 40 or 50% increase in premiums. Another fun fact, well, I find it fun, you may find it boring, is insurance companies, they say they have to have 40 or 30 or 50% rate to be profitable. They have to submit that to your state's Department of Insurance. It's actually up to the Department of Insurance to allow or adjust that rate, and oftentimes they're cutting it in half. So in order to be profitable, they need 20%, but the Department of Insurance says they can only take 10. So it's gonna take a longer time for that insurance company to be profitable if they can only take half of what they truly need.
So Taylor talked about the causes. What are the insurance companies' actions? First one, rate increases. They're more frequent than we've seen, and in most cases higher than what we've seen in decades, just to try to combat those severe storms and claims that Taylor alluded to earlier. The second thing insurance companies are doing is increasing minimum deductibles. 10, 15 years ago, $500 was a typical home deductible. Now we're towards $1,000, $2,500. Also, with the severity and the frequency of wind hail claims and storms, insurance companies are starting to move towards a separate deductible or a 1% deductible to correlate the changes with the roofs. On the auto portion of things, deductibles are creeping up. The standard bumper used to cost $1,500. Now it's more towards $4,000. And insurance companies are just increasing those deductibles to help offset some of that rate increase. Now we're seeing $5,000 to $1,000 deductibles on comprehensive and collision. Inspections, insurance companies are doing a harder look on inspections, whether that's satellite imagery or on-site or photos. They just want to make sure that the homeowners are taking good maintenance and precautions and doing everything they can there to mitigate and prevent as many claims as they possibly can. So along with the wind hail changes, insurance companies are looking at changing how they evaluate roofs. Before everybody said, hey, I got a replacement cost, I get a brand new roof. We're starting to see a shift towards actual cash value. And what we mean is they depreciate the roof once it gets to a certain age. Typically we see 10 years, but we do have some companies do 5, and some companies out there are doing immediate. As soon as you write the policy, the roof is on actual cash value. There's also, to the extreme, companies are pulling out of the states. Like California, for example, 2 insurance companies has completely pulled out of the state of California because they couldn't financially withstand the storms and wildfires that are happening. Claims are important. Claim frequencies that we're seeing, the more claims, companies are looking harder at non-renewals. So whether you've changed and lost that loyalty or you've stayed with your current company, claims are really a sticking point, and companies are looking at that more strictly right now. What's our advice to consumers? Stay loyal and sit tight. This isn't over. Changes are still coming down the turnpike. So just weather the storm and it'll get better. Loyalty matters. Staying with those companies, if you do have a smaller claim, their likelihood of non-renewing you or canceling you is less likely if you were to switch and you do lose that loyalty. Uninsured and underinsured motorists on your auto policy. More and more people are feeling that strain, and they could cancel their auto policy. Now you're left without it having any coverage if somebody does hit you and they don't have any insurance. Read your policy. Changes are coming. We're seeing changes constantly. Look over your policy. If something doesn't look right or something doesn't make sense, give your agent a call and have them discuss it. Probably the most important thing is talk to your agent. If you do have questions, do have concerns, give them a call, give us a call. We're glad to help you, answer some questions, do the best we can, and together we'll weather the storm together.
Like Blake said, there's lots of ways to mitigate maybe some of these changes, maybe offset the rate increases. Look at increasing your deductibles if the company isn't already doing that for you. Look at maybe dropping grandma's car that you inherited to liability only and not carrying full coverage and paying so much on it. Ask your company if you can get discounts for paying in full. A lot of insurance companies will offer that. And in closing, we hope this video was informative and transparent to everyone, not just our customers, but consumers out there. And like all hard markets, we must weather the storm, and I promise it will get better. I don't know how soon, but it will get better.